Hello, wealth catchers. Welcome back to the channel. Hope you guys have been having a great week so far. So, today's video, we're going to go ahead and break down the top three sectors of 2026 so far. As you know, or if you've been a reader of the watch list, you know, every month I like to break down who are the top performers of the past month for that watch list and who are the top three underperformers, right? So, for the first half of the year, definitely want to go ahead and do a deep dive into the top three sectors of 2026 so far. And just so we can get a good idea of where capital has been flowing in the first half of the year. Let's dive into it. So, the big idea of this whole situation is the market is definitely going to show you who they're rewarding far more than others, right? So, that's when we pay attention to the sectors. Usually, those sectors that are leading, that's who the market is rewarding, right? That's where money's flowing to. That's where capital is going to, right? So it's not just about performance, but it's understanding what the market is rewarding, right? What the focus is of the market. So for this year's top performers, we obviously have technology. So information technology, Spider ETF for that is XLK. It's up 28.24% year to date. Then we have energy up 23.47%. This was actually up even more if y'all remember when the um, Iran war started and all that stuff. Energy was really the top sector of the whole of out of all the 11 sectors for the year. But the thing is, they make up such a small allocation of the S&P 500, they didn't really move the market, right? Even though they were the top performer for a point in time of this year. But something like XLK, which is pretty much the biggest allocation of the S&P 500, that's going to move the market if they do well, right? So then, and coming in at number three, we have industrials, XLI, up 17.81%. So we do know with the industrials, that's like infrastructure build out, things of that nature. So we're going to show later on how all three of these things tie in together for what's going on so far this year. So why sector leadership matters, right? So again, shows you where money is flowing, gives you an idea of market structure and the year's themes, right? So sector performance is a real-time map of where institutional capital is being deployed, right? So this is kind of the most, I guess, behind the scenes way you'll get into it in terms of looking at where money is flowing, right? I know there's other situations where you could like what the whales are doing. There's things behind paywalls in terms of like, hey, what the insiders are buying, things of that nature. But for the most upfront, like in your face, free situation where you can go ahead and see where money is flowing, you can go to something like Charles Schwab, or it should be inside your brokerage account with Fidelity. They'll have like the sector map and they can show you over the past month, over the past year, 6 months, 3 months, where money is going, right? And then you can see which sectors are leading in response to those respective time periods, right? So, or you could use your AI tool, Gemini, Perplexity, Claude, and they can break it down for you. Just always double check, obviously, do your research, and you can even triple ax it. It's 100% accurate, and make sure it goes and finds verifiable sources so you can make sure that those percentages are actually correct and those leaders are actually correct, right? So, and then for market structure, it's going to help investors understand how the market is built and which forces hold it up, right? So again, we do know with rallies, usually tech has to be involved with the rally, right? Again, earlier I mentioned how energy rallied, but it really didn't move the market, right? So this will also give you an idea of who really holds power in the market, right? So over a year period, over the past 12 months, you can see XLC, which is communications, is one of the top performers, right? But year to date, they're not. So then I can show you over the past year that structure has changed, right? In terms of who's up there. So again, we have technology, energy, and we have industrials. And then you go back even further in time, you can see energy has always been a laggard for the most period of time in terms of like probably like 5 years. And then it leapfrogged all these other sectors into becoming one of the most important sectors, obviously due to this whole AI boom and all the situation that's going on with the AI build out. And then again, for the year's themes, right? The last reason why leadership matters, right? So it gives you an insight into the narratives, right? So that's AI, energy, infrastructure. So what's really driving the returns that we are seeing in the market, right? So we're gonna go dive into first information technology, again up 28.24%. If you want to get the specific exposure to just this sector, it's XLK. That's the ticker symbol you'll go ahead and look up to in order to allocate capital towards it. So this consists of AI leadership. So that's the dominant theme that's been pulling capital across the entire market. Obviously, we have our semiconductors that's blanketed in here. So your Nvidias, your Marvell, um, memory stocks like Micron, they bundled into the XLK ETF. Cloud infrastructure, so that's your Google Cloud, that's your AWS with Amazon, that's your Azure with Microsoft. So this is the backbone of monetizing every layer of compute demand. Then you have your mega cap strength, right? So a lot of the mega cap names are inside this ETF. So handful of giants carrying outsized weight and returns. So there's some top holdings that stuck out to me in here. Obviously, you got Microsoft, but we know how they've been performing over the past 2 years. But even when you have a big dog like Microsoft that isn't performing well, you can see the importance of holding a ETF like an XOK. Microsoft is doing horribly, pretty much for the past year and a half, 2 years. But then you have other names like Micron that's up, over 100%. You got names like Intel up, I think about 200%. AMD up 100%. So you got these other names that are propping up the tech sector and holding it when someone like a behemoth like Microsoft isn't performing, right? So the question could be, is this a technology rally or an AI driven rally? I think we all could come to the consensus that this is an AI driven rally, right? Because of all the news that's coming out, all the capex spend that's going towards it, and just the headline news and all the hype around this AI build out and everything. So this is definitely an AI driven rally. It's what we've been in the past 2 years. So our next sector is obviously going to be energy. The ticker symbol is XLE. As I mentioned before, we were definitely up more than this earlier in the year, but as we know, the back and forth that's going on with the opening of the Strait of Hormuz or the close of it, the back and forth with the deal being on the table, deals not being on the table, the threats from both sides, whether it's the U.S. administration or the Iran regime. So this has been a volatile thing if you've been in it. But if you went ahead and just XLE, got that at the top of the year, you're sitting in a good space right now. If you're trying to trade it, you definitely got whipsawed. You definitely got thrown around trying to trade it. But if it was a buy and hold for you, you did pretty well, right? So we got oil prices. So we got firm firm crude prices flowing straight to producer margins, inflation pressure. So energy is a classic hedge when prices stay sticky. As you do know that inflation has been in the news, energy was a big part of that CPI that we had recently, showing that it actually went up. And then obviously geopolitical tension. Again, back to what's going on in the Middle East with everything. And then energy demand, right? So energy is always going to be needed no matter what. And that's obviously being amplified by data centers, right? So energy is a very important layer of our economy. And without energy, pretty much nothing happens, nothing moves, right? So inside the energy sector, we got ExxonMobil, Chevron, ConocoPhillips, EOG Resources, and Schlumberger. So those are just some top names that's inside there. And then energy remains one of the clearest ways markets price geopolitical and inflation risk. So again, you do need access to energy, and it's a volatile sector to be a part of. But the importance of energy, I feel like, has been highlighted greatly over this past year of how important it is, even though the exposure isn't too great in terms of the S&P 500. So then, lastly, we're gonna round it out with XLI, which is industrials. They're up 17.81%. So some things that are powering this, right? Infrastructure spend, public and private capital rebuilding physical assets. So AI build out, the physical machinery behind the compute boom. Got data centers being built up, so that's power, cooling, construction, at an unprecedented scale, right? So we know so much money is being piled into this, right? Everyone's trying to, every hyperscale you could think of is raising their capex spend, not lowering it, which is also leading to some volatile or some little, sorry, volatility in those hyperscale names. Think of Meta, right? They're getting sold off like crazy because it's like, hey, your capex spend. But the people who are benefiting from Meta doing all that capex spend are the names here in the industrials, right? Meta may be getting beat down because the investors in Meta are like, where is this money going? Why are you doing this? When are we going to get a return on this? Who's getting that money from Meta? These names, industrials, right? So then also within there, you got defense and aerospace, as we do know that, especially with the government, defensive spending is always going to be a thing, whether you're looking at our, our Raytheon Technologies, General Dynamics, it's another name I could think of. Oh, Northern Grumpark. I'm saying that wrong, but NOC is the ticker symbol. I always get tripped up on the name. But think of those names when it comes to industrials as well. Then manufacturing, so that's reshoring and automation, lifting domestic output. So we do know that that's a big theme of the administration, trying to get some of that um, domestic output back over here in terms of our tools, our infrastructure, things of that nature, instead of outsourcing so many things. That's a big highlight of the administration to get that back over here stateside. So top names inside the industrial sector that pointed out to me, obviously GE Vernova has been on a great run. Caterpillar, it's been amazing. That was definitely one of the names that was added to the watch list at the top of the year, January 1st. And then you got John Deere or Deere and Company. So those are the agricultural tools, the tractors, things of that nature. And also they have some type of influence also in the infrastructure build out, right? And you got Eaton, which is about basically the electrification of everything. They're a big proponent in terms of what's going on with these data centers. And you got like you can almost call it like a dinosaur type stock, Union Pacific, right? That's the railroads, right? Things still have to get transported and moved around. You don't think of, especially with all the AI talk, with all the cloud, cybersecurity, everything tech. You don't think about the old guard, right? So something like Union Pacific, I think they're up, I think 13% or 17%. I know it's like, oh, it's nothing to compare to SanDisk or Micron, right? But if you're just hey, I just want my regular market return or just slightly beat the market by a little bit. Union Pacific right now is beating the market. And that's just a railroad company. They just put stuff on the train and transport it throughout the country, right? Super simple, right? So somebody has to build their physical infrastructure behind the next economy, right? So this is why it's so important, especially when we go through these changes of industry, of revolutionary type changes, right? These companies play a big factor because they have to build out for that to be a possible future, right? Impossible reality. So the bigger theme here, which leads us to this whole, it's an interconnected story. So technology provides the compute. So that's the chips, cloud, and software powering the AI era. Energy provides the fuel, the power feeding the data centers and the broader economy. And then industrials build the infrastructure. So it's the physical backbone turning capital into capacity, right? So all these things need each other to actually work and function out and to reach that end goal. So for our insight here, the market is telling investors where capital is flowing, right? So again, you don't chase performance strictly that, but understand what's leading, what's the structure, and where is the opportunity for you. So this is definitely what to pay attention to, especially going to the second half of the year. Can XLK maintain its leadership? I think it's safe to say that we could see XLK still remaining as the top sector, or technology remaining the top sector to close out the year. And will oil prices keep supporting energy? So will the situation with the Strait of Hormuz and all that, the issues going on with Iran, how that affect the sector for energy? Obviously, we're already seeing when the news started changing. The energy sector, which was leading at the beginning of the year, took a turn to the downside, right? Still one of the top performers in the top three, but it started trending downwards, right? So obviously, the closer we get to this deal, it's probably safe to say that XLE, I wouldn't look at it for the second half of the year to continue to run back upwards. I think it's either going to stay stagnant or continue to push downwards, right? As we get closer to a deal and that gets finalized and then supply comes back online with the Strait of Hormuz opening back up. Because remember, that's 20% of the world's oil that's flowing through there. So once that comes back in to the markets and to the society, obviously we can kind of see the energy sector go downward. But on the other side of that too, don't forget energy is a big portion of this AI build out, right? We saw Microsoft made a deal, I think it's with Chevron and Exxon for energy to go ahead and supply the data centers that they're building out. So something to keep an eye out, but this is something that I personally would go ahead and chase. Again, not financial advice. This is just for informational purposes. But I think the energy trade in terms of trying to peak and look for those that momentum to the upside as we had earlier this year, that's probably long and gone and forgotten about. Right. So good, probably hold long term, but obviously a trading situation, I would definitely avoid that. And can industrials ride the infrastructure and AI build out? This is something where it's going to highly rely on those capex numbers. When we reach a peak and then we start to see that number go down in terms of capex spend, that's when you see the story start to shift and change for industrials, right? So when that happens, that's when we can start seeing XLI start taking a turn for the downside, right? When Meta, when Microsoft, when um, Google, all of them saying, hey, we're pretty much done spinning out. That means they reached their capacity in terms of we built enough, we got enough ahead of the game, we could peel back that spend. That's when the industrials will begin to suffer because, hey, they've already done so much work. They're making their money on the front end already, starting to build out. Because eventually there's going to be a point in time where we do have enough data centers, we do have enough things going on the grid, stuff like that, where they could pull back and then now becomes a maintenance situation, right? It becomes a how do we maintain this infrastructure that we built out? That's going to be the next leg to look into for maintaining the build out. And then last question is, are these sectors extended or are still offering opportunity? So I definitely think there's opportunity still within industrials and technology and energy, maybe depending on what side of the fence you're trying to play once you go deeper into the type of energy names, right? Are we playing, strictly gas and oil? Are you playing the pipelines or what is it, the um, NLG and those type of situations, right? Depending on what layer of energy you're trying to go into. Because obviously within sectors, you have your subsectors. So whether you go into those individual names is where you're going to find your diamonds in the rough. But if you want to play it safe, always recommend going to the blanket ETF. So XLE, XLI, XLK, best way to probably play it. So to round it out, talked about the top three sectors of the year so far. So that's our XLE, XLI, XLK. So definitely hope that this was informational for you guys. I know it was a quick video. Usually I definitely have a long more charts and all that stuff, but just want to go ahead and put this tidbit out there to show where money has been going so far for this year. And then next video should be about the top three worst performing sectors of 2026. So again, find this information helpful, just leave a like, comment, subscribe, share it out. Definitely appreciate you guys stopping by. Don't forget to go to the website, thewealthcatchers.com. Go ahead, read some information. YouTube videos are also linked on there. So you guys have a great day. Appreciate you guys stopping by. Peace.